Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's take a look at the four major indices here today. They are off of those session highs that we had at the beginning of the show. S&P 500 now flat on the day. Dow down 80 points. NASDAQ still in positive territory, up about 0.2%. And the Russell 2000 up 0.14% on the day. But we're weakening here as that dollar continues to be strong. At this point, despite the fact that we've got yields falling also. That 10-year yield is at about 2.86%, but some weakness here. Dow now negative. All right, Kev, let's bring in our next guest, and that's for our Cash Tag segment, and that's going to be Andy Swan, the co-founder of LikeFolio. Welcome back to the show, Andy.
Hey, thank you.
All right, so we're talking shoes and FootLocker. Shares have been under pressure so far this year, but it's rallied pretty significantly since about mid-July, about 35% rally here. What kind of data are you guys seeing? Is the Nike direct-to-consumer hurting FootLocker, and the expansion of FootLocker's product offering, is that helping at all? Because people are going back to stores, it seems like.
Yeah, I'd say that you've hit kind of the one bright spot, I think, for FootLocker is that people are heading back to stores and back to the mall, which is good for a company like FootLocker. It depends heavily on foot traffic. Other than that, there's really not much positive to say that we can see about FootLocker. You know, this is a company that historically has very much relied on its relationship with Nike to bring people into the stores, to get people excited about buying shoes. They really wanted those Nike products. And Nike's move to direct-to-consumer has really taken off over the last couple of years, especially recently. A big upshift in that, people talking about buying Nike shoes directly from Nike, essentially cutting out the middleman, which is what FootLocker is. And so that has to hurt FootLocker, and we're seeing that really show up in all of our metrics for FootLocker. You know, people are less excited to go to the store. They're less happy when they're there. In fact, we're starting to see a little bit of that phenomenon where people may, if they do go to FootLocker, is to try on shoes, to check them out, and then maybe go buy direct from Nike or another competitor. FootLocker is trying to fill in the gaps with, by really offering Adidas shoes. They've leaned on Adidas a lot more recently because of what's happening with Nike, and our data at LikeFolio is showing that that strategy simply is not working. We don't see any indication, except for at the very beginning of that kind of partnership, that FootLocker is really getting any traction out of the Adidas push inside of their stores. And so, heading into this earnings report, I'm very concerned about FootLocker. Another reason why I'm concerned is because we heard from Walmart saying that back-to-school shopping was big this year, and LikeFolio data shows that as a macro trend. Back-to-school had a very good season, but we didn't see that uptick for FootLocker, and you really would think you would. If FootLocker was in a decent position, you would think that kind of macro tailwind would be helping them. But right now we're seeing consumer demand levels for FootLocker at or near all-time lows, and with the stock up so significantly over the last 5 or 6 weeks, like you mentioned, I think that there's significant risk on this earnings call of a downside move.
Andy, I think you're right in line with what I'm thinking. The title of this segment is The Long Goodbye, if you ask me, because their dependence on Nike, and unless they can find another brand to fill that space, Nike's going slowly and they're not coming back. Every single day, every month, consumers get more and more comfortable pointing and clicking to get their shoes. And I don't know about your social media line, but mine is inundated with advertisements from Nike and shoes in general, where you can just click right on there and you go right to their website. They're doing a great job. But Andy, are you seeing any substitution from Nike leaving? Is there any other brand? Is there anything FootLocker's doing to put off this exit? Because they have a lot of stores. This is like 2,800 stores, and Nike is slowly going, Andy, and they're not coming back.
Yeah, they're not coming back, and we really aren't seeing any effective substitution. That's the way I would put it. I think, they're trying, and they only have a few options. In fact, if I were to advise FootLocker executives right now, I would tell them to look at what Best Buy did to reinvent their business model a few years ago, because I see so many parallels between what Best Buy was as a retailer, and then transitioning into almost a service provider and an expertise center. FootLocker kind of has to do that same thing. They can't simply be a middleman for companies that are going direct to market. The other thing I think FootLocker could do is really get on the edges of some of these new shoe manufacturers that are coming out that could use the in-person advertising space, I guess you could say, that the FootLocker walls and displays provide, and help them build their brands with longer-term contracts. I think there's something there, but right now it seems like FootLocker is married to the bride that has already left town, and it's going to be a tough sledding for them. I think, especially with the stock up so much going into this report, and near resistance levels, I think technically it's going to be a tough one for them to really outperform on, going into this. So pretty bearish on FootLocker going into this one. And, if they prove us wrong, we'll come on and tip our cap. But I think at least from a short-term and long-term perspective, really, I just don't see a whole lot they have going for them.
Yeah, Andy, and as far as your data goes on, because FootLocker is in majority of malls, right? And malls are dying across the country. It seems like that's the case. That's also probably hurting their business. So do you see that deterioration in the malls? Is that flattening out, or is that continuing to deteriorate, which might negatively affect FootLocker? Because standalone store for a FootLocker, I see that hard to manage from their perspective.
Yeah, they kind of need that walk-by traffic, I think. I think long-term, we're definitely seeing that the mall is on the decline. It clearly is. I mean, from the heyday of the 80s when I was a youngster, that was the place to be, and it was amazing. And, we have those nostalgic memories of going to the mall and everybody going off their own way and finding something that they want. Now we're all doing that on our mobile devices from the comfort of our home. So it's definitely changed. So long-term, that deterioration is underway. I think short-term, there has been some resurgence because of, what people missed out on during COVID and all of those shutdowns and so on. But, that I think is a short-term blip. And, where FootLocker is located, what they're selling, all of it seems to be built around the concept of nostalgia and hope at this point. And so we'd like to see the company come forward with a really bold strategic plan in order to turn things around in a meaningful way.
Andy, one last question, because I think you're on to another interesting topic here that Tom brought up, and that's malls, right? Because malls in lower income or middle income, much like the economy right now, are struggling. But if you look in affluent neighborhoods, malls are still doing extremely well and are extremely crowded. And it's just a matter of where you fall on the income spectrum. Malls where we live, where I live out there, there's a mall near my home that is flourishing in this environment. Andy, do you guys have any data on malls and what they're doing, or is there a breakdown of depending on the neighborhood? I've seen malls empty out and be done, and I've seen others are flourishing. There's a big thinning out here, I think.
Yeah, there really is. There's a big separation like there is with the rest of society and the economy, I think. When you heard Walmart talk about, Walmart of all companies talking about their best demographic of the last quarter was those making $100,000 or more. That's an enormous shift. I don't think those are the customers FootLocker's been historically after. I think FootLocker has targeted a little bit more of a little bit lower income levels in terms of who they were targeting. And so it seems like that's just another thing going away from FootLocker right now. And so heading into this report, I would say if you guys can help us figure out a trade that's risk defined, bearish, that gives us some exposure that might put us out a little longer term if we're wrong in the short term, I think that trends with us no matter what. So that's the way I'm thinking about going into this earnings report.
Yeah, and you had that other chart, Andy, on earnings score momentum, and Nike is actually tracking FootLocker at this point. So going into this earnings report, do you have an actual score for FootLocker?
Yeah, we're bearish on FootLocker. I'd say, it's not off the charts bearish, but it's definitely bearish. And then when you factor in, like I said before, the way the stock has performed with the market, it feels like a pretty good setup to get something going in the down direction.
All right, great stuff as always, Andy. Hey, and congratulations on that BJ's wholesale commentary that you gave us last month. That stock's up pretty significantly after earnings and had a nice run after your bullish call on that one. Congratulations on that.
Hey, appreciate it. Thanks for noticing, and look forward to bringing you guys a lot more and your viewers a lot more in the future.
Awesome, great stuff. That's Andy Swan, the co-founder of LikeFolio, helping us break down bearish sentiment here, Kevin, on this one. You remember,